Welcome back to my channel. In today's video, I am going to talk about how to pay yourself as an LLC. Well, first, let me introduce myself. My name is Keisha Rondino. I am a real estate and business CPA, and my goal is to help you save on taxes, to operate your business efficiently, and to build wealth within your business and your investments. So let's get into it. So if you are operating your business as an LLC, my assumption is that you are doing this to make money. So you have went through the process to set up an entity through the state. You have gotten your EIN number, you have your operating agreement, and you have all of your documents in place to operate as an LLC, and your goal is to make money. Well, once your business starts to make money, then you are going to have to pay yourself. So the question is, how do you pay yourself as a LLC? What you're going to do is that you're going to pay yourself through what's called an owner's draw. And when you do an owner's draw, you're basically taking money from your business and paying yourself as an individual. And that could be done one of three ways. One, you can either do a transfer from your business to your personal account, or you can write a check from your business account to your personal account, or you can do a withdrawal from either an ATM, or you can go to a bank and then deposit it into your personal account. Each of those ways qualifies as a owner's draw. But as you start to do your owner's draws and you start to pay yourself, you have to remember that you have to operate from a business bank account, meaning that your business operations should go through and all be done within one account. You should not be using your personal account for your business transactions. That is what the IRS calls commingling funds. And the IRS looks down on commingling funds. They do not like when you commingle funds. So you should have a dedicated business bank account that you are using to operate your business. And that is the bank account that you're going to use in order to withdraw money out and honestly put into your personal bank account. Now, another thing to remember is that your business bank account is not your personal piggy bank. And so your business bank account should be used for business purposes, and your personal bank account is what you use for all of your personal items. You may determine that having multiple business bank accounts may be best for you. You may have one operating bank account that usually takes care of the day-to-day income that comes in, as well as the day-to-day expenses that you have come out. You also may have a payroll type of bank account, or you may have an account that you have just for taxes. All of those could be business bank accounts, and they're all going to operate very differently. They're each going to serve its own purpose, but they're going to be functional for you for what it is that you're doing within your business. You just want to make sure that when you do that owner's draw, that it is going to come from one of the business bank accounts and goes into your personal account. So the question is, how much are you going to pay yourself when it's time to do your owner's draw? So you can create a budget and determine how much money you need in order to pay all of your personal bills and be able to survive. And you can pay yourself that way, or you can determine that you're going to take a percentage of what your business makes in order to utilize as your owner's draw. Both of those options are correct. You just need to document how you're paying yourself and when you're paying yourself and how much that you are paying yourself. This is going to ensure that you have good records when it comes to paying yourself, and you can have a clear understanding of what the amount of your owner's draw is. And tracking what you pay yourself in your owner's draw is going to be helpful for you, because you don't want to get the amount of your owner's draw confused with what your operating expenses are, because your operating expenses are going to be those deductions that you can use for tax purposes. And so you want to keep your owner's draw separated out when it comes to how much you're paying yourself. Now, as you're paying yourself, of course, I can't forget to let you know that you're also going to have to prepare for taxes. And so your business is generating money, you're paying yourself. And so taxes is the next thing that you will have to be aware of when the time comes. So again, keep track of what comes into your business, keep track of what you are spending, and have a plan in place for what your taxes may be so you can be prepared for them. And put money on the side that will allow you to be able to pay for taxes when tax season comes. As I mentioned before about the different accounts that you can have, this is very helpful if you have an account that is specifically just for your taxes, because then when tax time comes, you have already allocated an amount that you can use for tax purposes. So you want to make sure as you're going through this process that you're making it as easy as possible. So the three things that you want to keep mindful of as you pay yourself is that you want to pay from your business bank account. You want to keep track of how much you're paying yourself. And then three, you want to be prepared for taxes for when the end of the year comes. So I hope this video has been helpful for you. If you are not subscribed, make sure you hit the subscribe button and you like this video, and you can check the description box below for additional resources that may be helpful for you as you're running your business and your investments. I look forward to seeing you in the next video. Bye.